afternoon. How are we all doing? How is everybody today? Nice Thursday afternoon, Ian, ST, Peter, Amy, Monkey, Julio, Paul, Evil, Gregors, David. It's time, Rico, AI, Al, AI, Al, don't know. Joe, Day Trader, Christy, Enrikas, how are we doing? All good. Afternoon, Brian. So, had some news today. Nothing much happened. 218k on the unemployment claims off of a 221 forecast. So basically as expected. We've had Barkin talking today. Hasn't really said a lot. When asked about Powell's comments last week on a possible March rate cut, Chairman Powell always speaks for the committee. Thanks, Barkin. That's it. No more news. So, yeah, nothing much today. We've got some RSIs. There's a few ADRs to look at. CAD Yen's just hit 125. So there's a few bits and pieces moving, which we'll look at in a minute, but no other news. Afternoon, Lucho, Goat. Afternoon, Steve, Virginia, Colonel, Mumo. Al, not AI. Yes, you've used a capital A and a lowercase l. So it looks like AI. But anyway, doesn't matter. You could be AI as well as Al. Afternoon, Evans. Yeah, let's get some thumbs going. We've got 50 people in here at the moment. There are not 25 minimum likes. I had 80-something likes this morning, which is pretty good considering we only just tapped over 100 people. So that's pretty good, people liking me. Don't know how many people we get through the stream every time, but anyway. So let's start off with ADRs. How long we got? 6 minutes to the open. So there's a couple of ADRs today. We've had big moves on the yen today. Basically we had, I can never remember this guy's name. It's not Ueda. Uchida. Basically come out this morning and say that they are maintaining a cautious approach towards rate hikes. So the market obviously has, it seems, read that as they're not going to hike the rates. They didn't say that. They said they're just going to remain cautious. It's amazing what you can read into somebody saying something, but basically they've just said they're going to remain cautious. So the yen today has devalued a little bit. We've got some ADR hits on the yen. So the CAD yen has hit 125. I shall be getting in short on that shortly. The Swiss yen has hit 125. Have we not had a reversal alert on that yet? Why am I not short on that Swiss yen? This is glitching. Okay, so this is my terminal's glitching out. Look, it's not drawing reversal alerts. It's annoying. So I haven't taken a short on that. I had this. I've got a feeling my VPS is struggling a little bit. It's annoying. I've just bought actually today another PC. So I've kind of just bought myself a server. I'm not going to use a VPS anymore. I've decided. I've had a couple of problems VPS wise recently, this being one of them, where the EA basically just something happens and it just stops. And that's a prime example of it. So that's not drawn correctly. Look, the reverse alert is actually off of that candle there. That should be a short. It hasn't taken it. I think it's just because I'm running so many terminals. So I've just added another terminal today. I've just bought myself a box, basically, and I'm going to run my own server. That's annoying. How did I fix the problem? Got a feeling I restarted the terminal. Just restart. This one is ADR reversal. Just restart that. So there's an entry there. I'm not in it because it broke, which is annoying, but never mind. CAD Yen, I will be getting into that one short. We got Euro Yen as well. That's extended to the upside. So we've just done 100 ADR on that one there. That was it. Done an MT4 update, that's why. Should have restarted all these terminals. Need to do that. Anyway, housekeeping. So Euro Yen extended, good looking reversal opportunity on that one as well, back down into there. So I don't believe these yen moves are really relevant. They've only said that they're cautious about upping their rate, upping their rates in this case, which they will do. So wouldn't worry about getting on any of these short at all. Pound yen, ADR, you've had a reversal on that one, I think. Yeah, already. So that one's already triggered. It's only up to 100 ADR, that one. And New Zealand dollar yen as well. And US dollar yen. So again, 125 ADR on that one. You see, US dollar yen's triggered today. What tends to happen with this terminal freeze thing, and it's a very weird thing. See, now it's drawn the alert in properly on that Swiss yen. What seems to happen is, as it's running through, it doesn't run through in order. It doesn't go that one, 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 that one. It doesn't do it like that. It runs through the charts that you've got open and executes. And what seems to happen is it gets to a certain point and then it gets stuck for some reason. CPU run out, RAM run out, something run out. But it basically gets stuck. From that moment on, it seems that for some reason MT4 just ignores that chart. Which is why you find other things will trigger and will be working fine. Just bizarre. It's a weird glitch. And I only have ever noticed it, and I've said this in Telegram to people that have said something's gone wrong. It's usually when you've got too many terminals open on your VPS. This is not my main VPS. I should be running this on my main VPS now, but I was lazy. So I will fix that. I'm just going to run my own. So I've got a dedicated machine coming anyway. But anyway, that's my problem. So that one's short already, US dollar yen. You've got a couple of weeklies which have hit as well. Markets open. Let's quickly run over and look at that. DAX this morning, we had a hedge. Well, I got hedged. So it broke down 1R. We pushed up 1R. We came back down inside again. So it's literally just a big whipsaw today for roughly 3 hours. And then we took off. Got out of the longs basically. So I was looking for a hit on the monthly high, which I got out of as I was anticipating. We pulled down, pushed up, and that has literally just triggered the aggressive exit there. So I'll be looking for a drop from the aggressive exit. FTSE, same thing, got hedged this morning. It's just really whippy open this morning. So there was no volume whatsoever. So hedged on that one, pushed up, pushed down. I saw these 3 Christmas trees go in. Market basically hit this level, went nope, 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 nope. So I got out and got out on the aggressive. Because the market said, I'm not going anywhere for half an hour. So I said, all right, fine. Neither will I. So out of the FTSE, and hopefully the DAX will drop. Let's have a look at the NASDAQ and the US markets. So NASDAQ today, no pre-market range, too tight. Dow, I'm long, no range on the S&P. So I'll be trading the opening range breaks on the NASDAQ and the S&P. Dow's already gone long. So yesterday on the US, we went out into new highs. NASDAQ basically broke out into new all-time highs, and we sat there and accumulated for the rest of the day. We've sat there throughout the entire Globex session and gone nowhere. So there's no movement today so far. So we'll see if we get some volume coming in. There's no news catalyst this afternoon either to drive the market anywhere. Dow Jones, yesterday we tapped up just shy of the high. We are rallying straight into yesterday's high now. And then as soon as we get through yesterday's high, we've got last week's high. If we can get out of that, clear air. So it looks like it's rejecting at the moment. S&P is a little bit different. Actually, it's pretty much the same as the NASDAQ, to be honest. But we actually opened up pretty much through the open yesterday. So very clear run out the highs. And again, gone absolutely nowhere so far. So it can do whatever the hell it likes today. If it rallies to the upside, there's nothing to stop it. If it comes down, we'd be looking at the weekly high. And back into propulsion, basically, which is the move yesterday that just ran and ran and ran. So we'll see where we go. But I'll be taking the 5-minute ORBs on the NASDAQ and the Dow, the S&P. Dow Jones certainly looks like it's got stuck at yesterday's high. So that's yesterday's high there, which we basically went straight into. Limit orders have triggered and the sellers have jumped on board. Just check that DAX coming down nicely. Got 1 minute to go. Afternoon, Crom, Alan Bay, Gav. Remember to like this time. Yep, good man. Afternoon, Themba. Google, I've been trading US 30 on 2 different brokers, and I have found out that IC Markets 0.1 lots is the same as 0.01 lots on my normal broker. Quite possibly. But you cannot calculate lot size using 0.1s. Well, you can get close, but EAs can't. Why don't we all just rent server space directly from you, and then you can manage our accounts? Yeah, can do. I used to run my own server instead of using VPSs. And I've run into problems with internet connection. There's your 5-minute ORBs. Seriously? Yeah, 42. Okay, so no trades on the S&P today. Range is too small. That's only it's less than 10% of ADR gone in there. 42. Minimum range is 49. 252 on a 249 on the NASDAQ, so it's tight as well. NASDAQ is tight. Plus side is obviously if we do get some decent volume and a break, it'll be easy to hit target, but there is a high probability of a whipsaw on a small range. So just about got a NASDAQ on. Dow's just testing the low of that cash balance. See if we get any buyers in there. But yeah, I used to run my own server here, and I had internet problems, and obviously it all went wrong. Well, it didn't go wrong. It just, obviously, I had intermittent issues. And it was a fairly low-powered machine I was using as well. So I've just bought myself a nice i5 13th gen with 32 gig of RAM. So that can run about 700 MT4s. Which is arriving tomorrow. So that's tomorrow afternoon sorted. Afternoon outro. I've already said that. No, I haven't. Maybe I have. Maybe I haven't. VPS tech support. How may I help? Glitch. Yeah. There's nothing wrong with my VPS provider. It's just I just decided I fancy running my own again. One of the reasons is I want to start doing a lot more testing. So I've currently only actually got 2 VPSs, but I've been doing the maths, right? So I spend $125 a month on VPS. I've got one big deep VPS and one smaller VPS, which is what is actually running the accounts. The big VPS is the one that I do an awful lot of testing on. So it runs multiple MT4s, doing all sorts of stuff. And I've just went online and looked at hedged on the Dow. Looked at small form factor PCs now, and I can basically get the equivalent of the dedicated server that I've got for £550 to buy. So I'm spending the equivalent of $1,300 a year renting VPSs. So I've just bought my own dedicated server with probably 50, 100 times more power, because it's a dedicated machine, for half the cost of what I rent a VPS for. Downside is I've got to pay for power, which isn't a lot. And obviously, if there is an internet connection issue, I have a problem. I don't have a backup line like the VPS guys do. So weighing it up, I thought, well, for 500 quid, I'd much rather have 10,000 times more power than I need, and chance maybe the internet might go down every now and again. But because it's a small form factor PC, it has Wi-Fi 6, so I can just hotspot it from my phone. Problem solved if the internet ever goes down. So it just seems like a cheaper way of doing it. And obviously, that's, you know, I'm paying about $1,200, $1,300 or $1,300 a year for a VPS, for two VPSs. So over a period of 5 years, which that machine will probably last with no problems whatsoever, that's $5,500 or so. Whereas I just bought something for $560 quid that's super powerful. So I don't know, just changed my mind on VPSs. I literally did that this morning. I got bored. Anyway, only because I was setting up a VPS, and I'm fed up as well. So I'm, you know, going into your VPS, like, sometimes it's fine. You can see, you know, loads black in there. So because you're remote, I'm remote desktoping to another country. Sometimes it's laboriously slow doing things. Whereas with my own little box down there, which plugs straight into my monitor, it's just, I'm literally on a computer, aren't I? So I decided to do that. Cut out the middleman. So I've got these around the wrong way now. I want that one over there. Let me just shut that down, actually, because save processing power. So NASDAQ's just pushed up into the highs and stalled out. The Dow has just hedged and gone nowhere. Again, very tight range. Difficult in the minute. It's so whippy, this market. Afternoon, Kennelly. If I didn't say that already. If I reboot my VPS on VPS Forex Trader, will all my EA stop working? Yes. It's a computer. If you turn it off, it stops. I have 4 dedicated servers and 2 cloud VPSs. Look at you. You can't beat a dedicated box now. I used to have a dedicated server, which wasn't a VPS. It was a dedicated box. Obviously, a lot more expensive. But the power, obviously, with a VPS, I mean, my VPS is running Xeon 5s with 64 gig of RAM. But obviously, I don't get all of that. I get a virtual CPU and a virtual RAM. The difference between running your own machine, I mean, I'm running 5 MT4 terminals on my machine here. I've got other stuff, 6 terminals. Everything else running, I'm streaming, doing all this stuff, not batting an eyelid. If I was trying to do all this on a VPS, it'd be like, it'd grind to a halt, wouldn't it? Just makes sense. Buy your own box now. They're so cheap now. What's the specification? An i5, i5, I mean, it's the 13th gen i5. That one, Optiplex 7010. i5 13500, 16 gig RAM. Hard drive doesn't matter, it's just running MT4s. Windows 11 Pro, so I can RDP into it if I need to, but I'm not. I'm going to plug it into my monitor, so I don't even know why I went. 11 Pro, I did. So yeah, it's that. Tiny little box. He's only 30 centimeters. He is. He's 30 centimeters tall and he's only 10 centimeters wide. He's a tiny little machine compared to the monster thing I've got sitting here, which is about 30 centimeters wide and about 2 foot deep. But it's a 13th gen Intel Core processor. So if you stick this into, although it's only an i5, if you stick it into CPU benchmark, nope, not that one. That's not what I usually use. I can't remember. What did I use? I don't know. But basically, I put that CPU in compared to loads of other CPUs, and it comes out the 31st fastest CPU out of about 500. So it's, you know, i7s and i9s are obviously faster, but that's the fastest i5 you can get. So cheap. No graphics card. That's why it's cheap, because you don't need a graphics card to run MT4, which is why my gaming PC was £2,500. 750 quid of that is a graphics card. You don't need a graphics card. It's running literally MT4 terminal. So 1 like, that can't be right. 36 likes, 87 people. Come on, get your thumbs out. And then we'll go and have a look at the chart. Oh my God. 4 hedges today. Hedged on the NASDAQ. This, I've had enough of indices. I'm going to stick the 20 grand from this account into hedging, because the hedge account's up 16% this month. We're only on the 7th, 8th. I'm so fed up with this index price action. It's just dead. The markets have just got no volume. It's like at the open, they just go, yeah, can't be bothered. And then eventually they just go, all right, let's buy some stuff. The opening ranges at the moment are just pathetic. There is no volume. So crap. Look at it. What happened to the beautiful, like, 15-hour runs we have, like 15-minute, 5-hour propulsion moves? It's just no volume. There's no effort at all. They can't be asked. The markets are just so flat. It's so frustrating. Just have to dig yourself out of hedges every day at the moment, of which I'm just about to do on the DAX. And I did on the FTSE this morning. It's no problem. It's just work, isn't it? I want to do work. I'd much rather not work. Why can't you just go up to my target, be done, and then I don't have to touch you for the rest of the day? That's what I want. Can I post a link to that PC? Yeah. If you're in the UK, I mean, you can get these in the States, obviously, but hey, look, there's 47 people looking at this item right now. We've got 84 people in here. Is that all of you lot? Are you all looking at it? Let's refresh it and see how many people are looking at it now. 48 people. Somebody else has just had a look. Oh, damn, I should have signed up as an affiliate, shouldn't I? Never mind. So there's no more news today. We've had all the news for the day, apart from Bullock. This is, I mean, it's 10:30 p.m. That's actually tomorrow morning. The market swap is at 10 p.m. So actually tomorrow, Bullock is speaking. But we have got the bond auction later. We had quite a bit of volatility off the bond auction last night. No directional movement, but a bit of volume came in. So just be aware of that. 6 o'clock tonight. It's the 30 years. We had the 10s last night. So yeah. I dropped the VPS as well, run a mini computer, yeah. The only downside is infrastructure. That's the only thing, isn't it? You know, if you have a power cut or you have internet, this go down, you're stuffed. So, but I mean, the thing with the way that I trade with position trading, if the internet goes down for a couple of hours, it's not the end of the world. I mean, I haven't banked anything today. I have banked 0.36 there. Have I banked anything here? Nothing there. And I've banked 3% there. But, you know, the difference between, in a position trade, the difference between looking at a chart 2 hours ago and looking at a chart now is, it's not really a lot, is it? So it's not the end of the world. If I was scalping with a scalping VPS, a scalping EA, then yeah, I would. Internet connection is imperative, isn't it? If you get into a trade on a scalp and you're looking to get out within 5 or 10 minutes, you lose your connection, you could be stuffed. But with H1, M5 and ADR reversals and stuff, it's just not, doesn't matter, does it? Oh, this yen as well. Drive me up the wall. We're just taking an aggressive on the yen this morning, on the pound yen. Looked like it was starting to reverse out of this propulsion gap. And again, going to stop out on that, probably. Turning into another frustrating month. Feels like the last quarter has been frustrating. It has been frustrating because these markets are just pathetic at the minute. Well, not what I'm used to anyway. Doesn't the VPS give you better speeds? God, no. Way slower. Much, much slower. VPSs, basically all the VPSs is a PC with multiple installations of a PC on it. A virtual personal server. So they get servers and they chop them up into 50 bits. You get a little bit of it. So all the VPSs share the CPUs, the RAM, and everything out of usually quite often now they're out of a bank of cloud CPUs and cloud memory, etc., etc. So yeah, dedicated server or a dedicated machine will be 100 times faster than any VPS you could ever get. The highest spec VPS on the planet, if you stuck a Core i3 processor CPU PC next to it and ran the same thing on a benchmark, you get much better speed. You're using all the resources of the entire machine instead of a bit of it. Nowhere near as fast. And connection to your broker's irrelevant. I mean, a connection to your broker makes no difference whatsoever to anything. People go, oh, I must get a New York server because my broker's in New York. Make a difference, is it? What's the difference between 200 milliseconds and 400 milliseconds? Nothing. That's the difference, what you'll get with connecting from London or connecting from New York. It's like that. The internet doesn't, it's not like we're not dialing up going, hello, Mr. Broker, can I place an order, please? Yep. Instant. I'm connected to, it doesn't tell me now, it just says primary. That's because I'm on Darwin X. But I've got to my broker here, I'm connected to my broker with 16.58 milliseconds. The robo servers are in Germany, long way away, 47.3 milliseconds. Yeah. So the difference between me connecting to Darwin X London and me connecting to Forex Germany is the difference between 19 milliseconds and 47 milliseconds. Do you really think that makes any difference whatsoever to placing orders? Nothing. It's relevant. I can't even blink in 47 milliseconds. That's how fast the orders are going through. The slowest server I've got here, if I was to possibly want to bother to connect to Singapore, is 491 milliseconds. Still takes less than a second to ping Singapore and back. Doesn't matter where your server is. It's irrelevant. Right. Let's have a look at some FX stuff while we're waiting. for the market to decide what it's going to do. I thought you wanted to buy a VPS until 2 minutes. I thought I wanted to buy a VPS until 2 minutes ago. You can't, I mean, think of it like a rental. I've just spent £550. Yeah. In the last 2 years, I've spent over £1,000. Way more than that, having access to VPSs. So that's if you haven't got 500 or 600 quid spare, get a VPS, because you can get a VPS for $20. Won't be the most powerful thing in the world, but if you're only running 1 or 2 MT4s, it doesn't matter, does it? I'd just rather have super overpower me personally. Double hedge, woo! Yeah, double hedge today. So it's the idea that you turn that box on and never turn it off. Yeah, so it's just going to sit under my desk and it'll be on 24/7, 365. I'm going to have to deal with Windows 11 updates. No, turn them off. Turn them off. That's what I did on my old one anyway. So with Windows updates, basically you can just say no, or just download only and I'll install them. So you don't have to worry about it. But I will update it every now and again. But not regularly. It will be just going through a stagnant section. As soon as you switch it, it will probably pick up again. Yeah. It is stagnation. The indices, everything's stagnant at the moment, isn't it? Yeah, as soon as I scrap index trading, it will go mental. I know. It always does. I'm running small extra account where I'm placing trades when you are in 2 to 3 trades in drawdown on live stream and setting targets around your break-even lines. VPS or indicator? That doesn't make sense. Yeah, it's a good strategy. A lot of people have played that strategy before. So you follow me. When you see me having 3 trades on, take your first one, and you will likely get out with a 1-hit trade, because I very rarely go more than 4, sometimes 5. So if you get in when I'm at 3, there's a high probability you're getting in at the right time. However, what you will miss is all of the single trade and 2 trade beauties that I get and generate tons of profit from, but you'll miss all of those because you're only getting in when I'm in 3 positions. So you're getting in on the end of the squeezes. So good strategy, but it's equivalent to just using a high level RSI if you think about it. So just use an 80 RSI instead of a 75, and you're basically replicating me getting in too early. Ta-da! Fixed. Don't use a VPS or an indicator, yeah. Can you show or explain how you get on blank chart TDM and ADR without any graphs, just indicator? Can you show or explain how you get on a blank chart TDM? What's TDM? And an ADR without any graphs? I really don't understand the question. Will you have a battery backup? No. Trade Manager dashboard? What about it? Oh, what? How you, right, without any graphs? Right, so the Trade Manager dashboard runs in a window. Yeah? So just pull that up. Yeah, so just like this. It's just running in a window. So you grab it. Yeah. The dashboards running on a blank chart is literally right click. God's sake, right click, properties. And everything there you can see. Yeah. Just turn it all white or none. And then it's just blank. Just turn everything white or none. Or turn it to none. I don't know why the foreground is white. The background is white. Oh, yes, I do. Yeah, you have to have those two. So the top two, for background and foreground, you have to have white. Otherwise, it shows the date and the price information. But then set everything else to none, and you just get a blank, totally blank chart. Let me just quickly go through some analysis before because I'm just going through chat at the moment. Driving up the wall, these indices at the minute. Right, so ADRs we've covered. There's a few there to look at. Most of them yen-based, or in fact, all of them yen-based today. So it's just the yen basically that's moved today off the back of what they said this morning. ADR reversals, 1.9 banked yesterday, nothing banked today. Just sitting in drawdown. The only thing that's there's nothing getting really worrying at the moment. US dollar Swiss and Euro CAD are 1.6 and 1.8. But yeah, nothing particularly exciting there. RSIs, went through these this morning. There's quite a few RSI extensions today on the hourlies and on the 4 hourlies. Aussie dollar CAD extended to the downside on the hourly. That one is about to trigger 25 extension, so I'll be getting into the next reverse alert long on Aussie dollar CAD. Aussie dollar US dollar is extended as well. So weakness in the Aussie today. That's not quite extended enough, but that's a nice potential double bottom coming up in that reversal. But this seems to be holding at the moment. This US dollar move, it's not, I wouldn't say it's particularly strong, but it's not particularly weak either. So we did get the bounce there. So I took that one off this morning in the live room this morning because it looked like we were bouncing, and we have. But now we put a 3-bar reversal in potentially to go back down again. So I have no idea what's going on with this US at the minute. There doesn't seem to be any strength or weakness, and they keep coming out with mixed messages. So it's the same old story, basically. But that's extended to the downside. Obviously, if the US dollar rallies, that will come down further, but it's more likely it's, I think, going to weaken. CAD Yen, that's extended. Obviously, we know lovely H1 extension there. So just new leg up, pull back, new leg up, pull back into propulsion. Pound odd, there we go. So there's the alert on Aussie dollar CAD. So that's your alert there. So I'll be taking the next 5-minute reversal alert long on that one, which will be there. CAD Yen, I'll be getting in short on the CAD Yen as well on the next alert. We got Euro odd, also extended on the hourly. That's coming out to a nice triple top opportunity there. Yeah, at ADR. Failing that, you've got that high. May even react at 125 today. So there's a couple of levels coming up potentially for reactions there. And that's a nice big 2-day push. So looking for that pullback, pullback, pullback. Just, you know, usual stuff. But that's nicely extended as well. Euro yen. So a lot of these yens obviously are going to be H1. So all these ADRs basically we've looked at already. They're obviously extended on RSI as well, because this is a big strong weakness in the yen today. Good levels coming up on this one as well, Euro yen. So we just filled all the propulsion gaps from the leg down. So we got that high there, which is a previous support. Accumulated resistance, 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 125 ADR. Pound odd. Big strong push on this pound odd. So that's coming up into weekly high, and obviously that little high there, which is slightly lower than last week's high. So again, just looking for a pullback down again on this. Again, there's no advantage on any of these at the moment. Fundamentally, the pound shouldn't be stronger than the Aussie shouldn't be stronger than the pound. We're all just waiting for interest rate drops. So there's no reason anything should really take off in any direction at all at the moment. So just play the reversals on everything. Just they're taking a long time, some of them. So pound odd, pound yen, that's extended now again. This is why I've got into an aggressive today, because we've got the extension. So obviously I've been in this since the beginning of January now. So we're coming up for sort of week 6 roughly. So we tapped into this propulsion gap and we got an RSI extension off of a 2-day rally. So that's why I've got this aggressive drawdown control position on. You can see my stop loss is there. Yeah. So I've given it roughly just over a quarter of an ADR of movement, just above that high. The worst possible place you can put a stop loss, just above a high. But I'm anticipating this turning into an M pattern reversal at 125 ADR because we're massively extended on the RSI. So I'm just looking for a pullback down into this propulsion gap. If they want to continue this yen weakness, fine. But if we can get a down leg on it, I can exit that aggressive drawdown control position, and then I'll do a load more drawdown control as I did before. So exactly the same plan as before. Aggressive drawdown control position, looking to exit when we get down into there. I mean, if it comes down quite hard, I might move this down and see if I can just get out the whole thing. But if not, my plan is to get out there, and then I will probably take that one off completely. Might take one of those off. It depends how much profit. That I think that's about $400 profit. So I'll use maybe even $300 of that profit just to do DD control below the line. Because I just anticipate that until the Japanese come out and say something, or Bailey comes out and says something for the pound, there's just no reason for this to do anything. I just don't want to be sitting here for another month. So I'm just trying to eke away at the position. Same with the US dollar yen. That's also an H1 today down there. We'll just look at that is the next one. We pushed up very, very strong. I've got a sell stop ready to go. I'm going to move that up now. So I've got a sell stop ready to go with an aggressive drawdown control position. So this one is in 3.56 with 4 positions on and 0.98 lots on it. So I'm going in with 100% aggressive drawdown control, 0.98 lots. And I'm just going to see where the next reversal is going to be on this one. So where I've got it is pretty much where I want to get in. Just waiting for them to break back down. So the M5 and the M15 reversal are pretty much in the same spot, which is off the back of that rally. So that's where I'm going to get in. And hopefully we'll then just start that reversal back down again. And same with this one on the hourly. So I haven't really got a target on it yet because obviously I'm not in it. But the average is down at 225. It's too far away because I had a problem getting into a second position off of this because obviously the news. So I've got quite big spacing on it, which is why I don't normally get in aggressive on this many positions, but it's really, really, really spaced apart, which means that I'm a long way down on the average. So that will bring the average up somewhere in the region of there, I would imagine. So I'll be looking to get out in here. And again, we'll take off half of that, and then wait for that yen. I should have known. I should be prepared for the Japanese to drag their heels. That's all they ever do. So nothing. So bank 0.36 on that today. Hardly anything banked today again. 6.5 there. Hedging. Let me just quickly check the indices. Out the high again on the NASDAQ. Dow's not gone anywhere. Look, the S&P hasn't even got outlook. This is the thing with these tight ranges. I'm glad it didn't take that today because that is a prime example of why these tiny little ranges mean that before the market opens, there isn't anybody interested in trading. We got a tiny little range. There's no movement. So the open tends to be lackluster a lot of the time. And this is why we don't trade them, because that would have been a hedge as well. It's just not going anywhere. There's no volume. It's exactly the same as you had them this morning. If there's no news, there's no volume. That seems to be the norm at the moment. So that DAX is probably not going anywhere either, is it? Nothing's going anywhere. So hedging bank 3.14% today. 3% yesterday, up 17% on the month. Nothing much else to bank there at the moment. But yeah, so in lots of hedges. Got our first position gone into 1%, which is Euro odd. Oh yeah, because I just got out this morning on the longs, so waiting for short entry, which will be 52. So close. So that won't get me into third position, unfortunately. It's less than half an ADR. 55. Nope, it's got to be higher than that. So I'm not going to get in on that. So what I want to happen is this to push down and then push back up, hit that high, then your reverse alert will be there. Get a reverse alert nice and tight. Third entry will go in there. Average will jump up to there. It will pull down to the bottom of the range, exit all the shorts. Job done. Wouldn't that be nice? Let's see if they give it to us. But yeah, nothing else in drawdown of any problem at all. So apart from that Euro odd, that's the first thing. It's hit 1%. So yeah, nice. Oh my God, look at this NASDAQ. Coming back down again. Dow's going back up again. S&P's not going anywhere. Just want the DAX. If DAX can come down, that'd be lovely. If I can bank on the DAX, that would be fantastic. I almost want to stop the EA so that I don't bank that 127. I want to just let this thing collapse. See if I can get a runner out of it. It's just like pulling teeth at the minute, isn't it? Anyway, trade manager, funded engineer have told me I will get my accounts back next Wednesday. They say the service that kept track of the accounts pulled out without notice. The service that kept track of the accounts. MetaTrader. Isn't it? It's all a load of rubbish. They're feeding you a load of crap. They've been caught like the rest. And they're panicking and trying to find another way. Keeping going, basically. What's the reason why you've gone with 0.2 risk on ADR and hedging and 0.1 on H1M5? Because that's what I always do on H1M5, and it's the larger account. So it's running twice the revenue of the other two. And that's what the other two were running on the server last year. So the VPS that ran these two last year that's what they were running at, not that one, and that one. So I've just kept it as it is. Maximum drawdown I saw on that was around about 35% on a 0.2% risk, which I could just about cope with. The only reason I can cope with it is because it hasn't got anywhere near as much money in it as the other accounts. I wouldn't want to run it with too much money, but that's just me. I know other people are, but not for me. What's the reason why? Oh yeah, that's that. Afternoon, Rajiv. You've got more than 10 likes and up to 50 people. Great to see people liking you more. That's because I keep telling them to like me, Rajiv. If I tell people to do it, they do it. Smack that thumb. Hit the like button. I'm hoping that people can work out what that means, because I put it up every day since Brian kindly made it for me. But I'm assuming people actually know that that means hit the like button. But you never know. Talking about processes, have you seen ARM up to 45% at the open? Nope. Up 45%. Right. I don't keep track of stocks at all. Don't play stocks. Don't even know who ARM are. I heard of them. I presume they make processors. I'm not quite sure if they're up 45%, why they haven't affected the indices in any shape or form today. It's amazing. Something can be up 45% at the open, and yet the indices don't even know they exist. Just goes to show how much the top 10 stocks run these things. 80% of movement comes from 10 stocks. Swaps must be crushing that GJ. Yeah, I don't know what that is. Swaps wise. It's not that bad. 80, 120, 150, 250. Got $250 in swaps at the moment. Plus what I've already closed out on it, obviously. So I closed out last week. Oh, another rebate. Thank you. Closed out on it last week, but the swaps there was 30, 50, 40, 50, 60, 70, 80, 90, 100, 225, 325, about $340 in swaps last week. But then I banked $1,600, so it's all relative, isn't it? But yeah, this is the trouble with these yens at the minute. They're expensive to hold. I might try and get in on a break of that bear candle. I want to try and get in tight on that and get the average up as much as possible. Out long on the NASDAQ? Really? Hasn't moved yet. On your H1 hedged, you added some more information. That's just how much 0.25% is on the account. So 0.25% is $37.50. 0.5% is $75. It's just for me. I'm not used to trading this. This is the first year I've traded all three strategies live with different sizes of account on the stream anyway. So I'm struggling a little bit to know when to bank. So it's these positions over here. Look, $69 there. Yeah. That's nearly 0.5% profit on that short. So it's just to remind me that if I see anything in $75 profit in the P&L, it's 0.5%. If I see anything at $37.50, it's 0.25%. Yeah. On H1M5, 0.25% is $125. 0.5% is $250 because this is a 50K account. So it's just to help me just quickly go, that is 0.5% in drawdown. So if I close out something in 0.5% and I want to do drawdown control on something, I can go, right, I need something's in 0.25% or something's 125. So just to remind me basically what the actual values are. That's 75, 150. That's all it is. Just so I, just for me. ADR Aussie CAD. Australian dollar's a little weak today. The Canadian dollar incredibly strong by the looks of things. Oof. Euro coming down hard against it. Pound will be coming down hard against it. So Canadian dollar rallying at the minute. Obviously because I've got short exposure on. Across the board. Not my day today. Okay, Dow's broken down. So I'm happy with that 5R target on the Dow. That's yesterday's low. So we'll see if we can get a run down into yesterday's low. We've got this area here, which is the Globex high, which is the propulsion move that we had yesterday. So there's two areas to watch. This Globex high, which is the propulsion gap. We may well get a rebuy on that level. Failing that, we'll get limit orders triggering off of yesterday's low. So those are the targets to the downside on the Dow. I'm just going to leave it yesterday's low at the moment. We'll watch price action if we get there. I'm not convinced we're actually going to get anywhere today. Upside on the Dow, we're going out into new highs, so I'm just going to leave at ADR. So if we do get a breakout the highs, potentially we could get a similar move to that, which is a breakout yesterday on the NASDAQ. And obviously, if we do get that breakout today, you know, that move there on the NAS was 240. That's ADR. So I'll be looking for an ADR hit if it breaks to the upside. So I'm just going to leave it in as 5 hours at the minute. God, NASDAQ's pushing up. That means the DAX will. If I close this, it's going to collapse. It's break even, basically. I'll do anything with this today. I'm going to give it the benefit of the doubt for the minute. It's not even ticking. It's just no volume. That's what I said this morning in the live room when the DAX opens. Like, where is Germany? They are absolutely asleep. There's nobody there. If you're thinking about 20 to 30% drawdown on hedging at 0.2% risk is essentially 10 to 15% on 0.1. Yeah. So it's not a more dangerous strategy. It's a different strategy, totally different strategy. Goes into more drawdown. But it banks more. So ARM make risk processors. Oh, they're a British company. Well, that's why they're not affecting the NASDAQ then, because they won't be in there. They'll be in the FTSE. So the FTSE this morning came down. If they are in the FTSE, I presume they're in the FTSE. I don't know. Going to be big in AI. I don't pay attention to stocks anymore. Used to. We're actually gapping, look, on the DAX. Look. This is how little volume there is, right? We closed there, and it's gapped up at the open of the next candle. So that one there as well, look. We gapped up on the candle. There's just no volume. Again, we just keep hitting these little voids of just nothing happening. Annoying. I should know this, but the hedging strategy uses the MRR EA, yeah. So it's the market reversal alerts EA. Literally, all it's doing is takes every single H1 reversal alert. Reversal alert, getting long. Doesn't use RSI. In fact, get rid of it. Don't need it. Doesn't use the RSI at all. It literally takes every reversal alert. So we are just getting in on market structure. That market structure break either works or it doesn't. If it doesn't, we turn it into a position. If it does work but not enough and we get a reversal in the other direction, we hedge, and whichever one works, we bank. The other one, we turn into a position. The reason it gets into big drawdown is it will take a reversal alert there while, for example, the RSI is totally flat in the middle of a range. And obviously, if that thing then starts to squeeze, you're getting in at the very, very top of the squeeze rather than after the market has moved and got extended, which is what we do with H1M5. That's why it's more risky, because you're literally flipping a coin. You're going, there's been a buyers have entered the market. Let's buy. What's the odds? Same. Except when the market's extended, the odds are in our favor because the market is exhausted. The banks are sitting in loads of profit that they need to take off. So there's more probability of a pullback, isn't there? So it's just more risky in that respect. But because of the way it trades, it banks a ton of money. Like I said, 145% last year. because it's always banking, but it will sit through some squeezy moves. That will be pushing up again, surely. It's not, though. It's just not moving. No, it does go into more risk. I'll just explain why. More drawdown. That my account here would never get anywhere near that level of drawdown. If I doubled the risk of it, yes, it would. But it's this is not this. Look how many positions I've got on here. Yeah, H1M5, and look at how many positions are on in hedging. This is an always in strategy. It is always in. Yeah, not that one, this one. It's always in the market. It's taking double the amount of trades, which is why it gets into double the drawdown. Anyway, don't trade it. If you want to trade it with 0.2 if you want, but I would crap myself. You'd probably blow your account. Take it with a higher risk if you want, but I would worry about it. If you want to trade H1M5 with 0.2%, you can do. But if you're trading every pair, I get into 15% drawdown with 0.2% risk, 15 to 20% of drawdown with 0.2% risk, using exposure on no more than 8 pairs. So that would be equivalent to 40 to 60% drawdown if I traded everything on H1M5. Anyway, I don't want to go into maths, but do what you like. It's up to you, your risk. I personally, the way that I look at risk, right? If I was trading a 250k account, I would use 0.05%. Not because of any other reason than I'm trading $250,000 of funding that could just vanish. Yeah. The reason I'm trading lower risk on a 50k account is because it's 50k. That's 15. I can give monkeys if that disappears. It's a holiday. I spent more than that on a holiday. It doesn't matter to me, which is why I'm high risk on it. I would never use my income stream with high risk. Yes, I could risk 0.2. Yes, I would probably make much more money. But then again, I could lose my entire income, my house, my family, and everything. You've got to think of it from your perspective. This is your job. This isn't fun. It's not gambling. It's an income stream. You've got to treat it as such. The higher your account balance, the lower you risk. Unless you've got balls of steel. If you've got balls of steel, do what you like. Yeah. But go and look at the squeezes that you could get into and imagine getting into something like this here with 0.2% risk, scaling in at half an ADR. Entry, 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 entry. You wouldn't survive it. But if you've got shorts on going that way as well, you'll be all right. Because you use the shorts to get rid of the longs. H1, we don't have that luxury. We are full on drawdown. It's a totally different strategy. And it's a different amount of money. You've got to put it into perspective with, I've traded big accounts with that much money, and it's horrible. It's a horrible thing because every tick is so much cash. It's much more comfortable to scale it back. It's a no stress strategy, isn't it? If we're entering with 0.1% risk, there's no stress. I'm not worried about anything. The pound yen is squeezing the crap out of me at the moment. I don't give a crap. What's the worst case scenario? At the moment, I'm sitting in 2.4% of drawdown. I can just shut that down and take that $1,300 loss. It's not the end of the world, is it? And that's been squeezing me for 6 weeks. If I had 0.2 on it, I'd be sitting in 5% of drawdown. It's getting a bit riskier, isn't it? But it's like, you know, risk is up to the individual. There's people who trade very, 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 very high risk, and they're absolutely fine to do that. But you've got to have the discipline to be able to shut those positions down and take a big loss on them when you get into big trouble. So each to their own, really. They're new listings on the NASDAQ. They were once on the London Stock Exchange. Oh, right. Okay. They're on the NAS, are they? Well, they're not really doing much, are they? If they're up 45%, where's the action? They must be right down at the bottom of the NAS, surely. What they're called? A what? ARM. They don't seem to appear in the NASDAQ. ADP. They're not listed in the NASDAQ. That's why they're not moving, because it's not a NASDAQ stock. Or if it is, it's certainly not listed on that website anyway. Are you trading on more accounts than the ones you present here? I have 2 other accounts, yeah. I'm closing out DAX. I'm so torn as to whether to close this out or not. Right. Closing the DAX. Not going anywhere. So just banking the profit on it. It's $50. There's just no point. Can't make money in days like this. So these hedges are just going to deal with NASDAQ. Just going to put it up to the top of propulsion to go down. Upside will leave at 5R. I just can't believe we're going to get anything today. So I think these are just going to be losses today. And in the backside. ARM shares saw after reporting strong earnings and forecast. Yeah, so they're holding an IPO, but they're not listed in the NASDAQ. But don't forget, NASDAQ is only the top 100 stocks. So they've just listed, basically, but they're not going to just jump straight into the top 100 NASDAQ stocks, are they? They've just gone gone public, basically. But if they're in AI, I should imagine they will be there very shortly. TradingView data has ARM as NASDAQ listed. 60. Nice. I don't know. Yeah, maybe they are. I don't know. I was expecting to see this collapse then, seeing as everything else has decided it wants to try and push down. Right, well, that's not moving today, so there's not a lot we can really do on that, is there? So everything else is just kind of sitting around at the minute. Everything is sitting around at the minute. We're just stuck in everything. So I will be watching this yen, hoping that we get some kind of pullback on this. I'll be jumping into the US dollar yen short with an aggressive when we get some bear movement. I'm just going to trail this up basically underneath the candlesticks on the hourly, because that will mean we've likely got a 5-minute reversal alert triggering. So, but yeah, I can't really bank anything today because literally everything is sideways. The yen is, I've only got 2 positions on the yen, which is squeezing, which is making up 6% of that 8% drawdown. Euro pound is the other thing on the H1. Again, I've been in this since the beginning of January. We had a 2-week sideways, a news event, a week sideways, a grind down, and 3 weeks sideways. You just can't do anything with this market. It's just not moving, and we have to just sit here. All the trades are invalidated, so it's either going to do that or it's not. I just want it to do one or the other at the minute. It's such a frustrating market that we're in. Again, this one just gone back on again. So the same trade. All I'm doing is just banking money, which is great. Got it on again. I'll take it off again. Looking for a push up into propulsion, but we can't get there, can we? Just can't get anywhere. Driving me nuts. Not necessarily the top 100. Yeah, it's in there somewhere, but you mentioned hedging has done 16% this month. What drawdown is that in? I don't know. Just looked at it, didn't we? 8%. 17% it's done. 8.37 at the moment. Aussie dollar CAD might bank. Is that ADR? Are we going to get another reverse alert? I might leave that on actually because it's such a tiny hedge. It's literally hedged at break even, so I might leave that on and just see where that goes because it's not really going anywhere. It's going down, but it's like a week up, a week down, a week up, and we're just making new lower highs, which is great. It is bearish, and it's been bearish for absolutely ages, but I don't know whether can't really see any support coming up that would stop it dropping at the minute, so I might just leave that on, but it is at ADR. I'm not going to get another position on to get out of it though. Oh, screw it, let's take it. Might as well take it off. So long only now on Aussie CAD. Target is all the way up there. So it's like at the moment, you just literally at the minute, you have just got to grab everything. Anything that goes into profit by 0.25% even, you just got to bank it because all we're getting is sideways or a news event followed by sideways. So, we're 100% working around the news. The news moves us to a new location. We're just going to balance 4 weeks. So you get anything that actually moves in your favor, the high probability is it's going to come back down again. So all we're getting is, unlike normal position trades where we're getting that sort of movement, and we can just scale in, scale in, scale in, scale out on any kind of market structure break. We're just getting in nothing happening. We have a news event, we get in again, nothing happens. We have a news event, we get in again, nothing happens. It pushes up a bit, you can get out of a bit, get out of a bit. That's what the conditions are like at the moment. All we're waiting for is a news event in the opposite direction. Everything's completely undone. We're just not getting any news that is impacting the market strongly enough to move anything, because the whole thing is waiting for interest rates. And nobody's given us any indication. And all we ever get from all of them is the same bloody thing all the time. This sort of no information. That's all we get. Useless. So we shall sit here and we shall wait. Glad I got out the DAX. It's one less thing to drive me nuts today. Dow is on the move, finally. So Dow's out the pre-market lows. We're on the way down. So hopefully we get a 5R out of the Dow. So watch the Dow when we get down to this propulsion gap, which is the Globex high break. And then yesterday's low, which is what I'm after. See if we can get there. Euro odd H1 and H4. Not sure what that means. It's an H. Mean H extended? Sort of. Yeah, I mean, it's 70. So it depends what you're using as an extension. That's not up to 70 on the 4 hour though. Again, it's, it's 1, 2, 3, 4 weeks. Just contracting. We're just sideways. Sideways, bit of a move, sideways, bit of a move, sideways, bit of a move, sideways. That's the 4th of December. We've had 1, 2, 3 moves since the 4th of December. We're in February. This is when I started moaning about it, wasn't it? Back in December, I was like, I got out of December. What did I do in December? Something like ridiculous, like 3.5% or something stupid, wasn't it? 5%. And I stopped trading a week and a half before because I was just fed up and I went flat. I was just, it's just, we've almost missed an entire quarter of earnings potential, haven't we? How often do you withdraw money? Quarterly, usually. When I need it. It depends when you need it. If you need to pull monthly, pull monthly. But you're better off compounding. So if you can compound it, if you leave it in there, the longer you leave it in there, bear in mind how the EA works and how the strategy works. So this account here that we're looking at, the hedging account, started off at 15K. It's now 19 because I've left it in there. I haven't got to take it out. So what it's doing now is risking 0.2% of 19K on every trade instead of 0.2% of 15K on every trade, which means that every win is slightly more money. That is the reason I've got this down here. Yeah. To remind me that these figures are inflated because the account is actually bigger than when I started. So actually 0.5% is $75. So that I haven't got anything sitting there. It's 37.5. So that one is nearly 0.25% in profit. That one is 0.25% in profit. It's showing as only 0.19, but it's not, is it? It's 0.25% of my initial starting balance, which is what is displayed down here. So this is my percentage return on the initial starting balance. So you draw it when you need it, but the longer you leave it, the more you will be able to make. So if you can leave it in there for 3 months at a time, you get month 1, great. Month 2 is slightly compounded. Month 3 is very compounded, which then means you can draw out. And if you don't need to draw it all, don't draw it all. Leave it in there. Think of it like a business. Yeah, when you're running a business, you have a starting balance, you have a cash flow balance in your account. You don't, like if you're a business starting on 100K and the business generates 30 grand's worth of profit, you don't draw the 30 grand out. You draw out what you need and you leave the rest in there for the business to use. This is the business. The business is using the capital available. So the more capital there is, the more risk we can take, the more money we can make. But obviously at some point you have to draw out. So my hope is, and the idea is that this is basically my holiday account. So the idea is, what I'd like to do is get this to a point where I can just draw out the holiday. This is my bread and butter. At the moment, it's not very bread and buttery. But then again, I've reduced my account balance by 50% because I've put money into other accounts. So it's all a pot of cash. How you use it is entirely up to you. And what you draw out when you need it is what you draw out. If you're sitting there with 25 grand savings in the bank, you don't need to draw any money out, do you? If you can draw that for 6 months, leave it, because this is going to make more and more and more. Use what's in the bank. You know, if you sell a car for 15 grand, stick it in the bank. Don't draw out of this. Spend that 15 grand. Whittle that down until you need to pull this out, because this is just going to expand, isn't it? Where are you looking to go on the Dow? 5R basically. So up 5R, which is basically a breakout today. So today, if the Dow breaks out, I'm looking at ADR. If it breaks down, I'm looking at yesterday's low. So just yesterday's low. Can't see my trades for some reason on the bottom of the screen. Path. DAX is on its way. Typical. I told you that would happen if I got out. But you can't, I mean, look at this thing. I mean, you can't make a decision on this. Look at the wicks. No idea where we're going. No idea where we're going. No idea where we're going. We've gone down a little bit, but still no idea where we're going. No idea. No idea. No idea. No idea. No idea. No idea. Yeah. 5, 10, 15, 20, 25, 30, 35, 40, 45, 50 minutes. No idea. I'm not going to risk that or that based on the market having no idea where it's going. So out. Take it. Just not for money. Take it for Christ's sake, just to get out of the thing. Get out of it. It's not working, is it, today? Like I said this morning, when we got into the DAX, you can't trade a momentum breakout strategy without momentum. Momentum is the key to the strategy. You don't get a breakout without momentum. There is no momentum. There is no breakout. There is no movement. It's a momentum strategy. Look at this S&P. Murder. I don't care who you are, what direction you've gone on this today, you are losing. Nobody's making money on this. If you went long at the open, you've screwed it. If you went short at the open, well done. Yeah. We've had one wick which has tapped 1R. It's just not moving. It's just impossible to make money. So you just have to get out with whatever you can, whenever you can. These conditions are just not conducive to making any money. But usually it is when you get out, that's when it actually goes. Just had some alerts coming. 150 Swiss. Swissies off. 150 Swiss yen. Pangen's rallying as well. What is that? What is that? John Wick's hand has morphed into a dog's head. He's not looking. Look, his face is a bit stretched as well, isn't it? It's getting worse. It's getting worse. That is the worst, though. That has got to take the award for the worst AI generated hand that we have seen. It's more of a hoof, finger hoof. Ah, John. Poor old John. Not thinking about 3R mark. Could reverse on the Dow. If it can get there, yeah, I mean, that's what I said to watch for. So either watch for the propulsion bounce, which will be roughly 3R. So that propulsion gap top there is 38,593. So yeah, 3R basically is the top of that propulsion gap. So yeah, it could go there. If it doesn't go there, it's going to go and retest the low of yesterday, in which case we should find some limit orders trigger. And at least we only need a bounce, don't we? Just, it's pretty so frustrating at the moment. What's my P&L looking like this month on SIH? Not good, wouldn't think. It's a loss, I think, this month. I know, I'm $830 up. So I'm up this month, 830. But yeah, 8 days of this it's basically been, isn't it? We've had one good day. We had one triple break where it just broke, hit target, all done. And I did, what was it? 2, 4, 5, about $600 that day. So $600 of that 830 is one day, which is the days that we're used to getting. It's just not happening, is it? It's just, look, it's the same thing as FX. Oh, stop now. So NAS, we're out the highs again. So again, 5R, which is just shy of ADR today. So if this is going to break long, I'll get out just before we get to ADR. So it's about 3/4 of an ADR. And then obviously if it does push up into ADR, we'll trail up exactly the same as it did on the DAX. So it's exactly the same play as the DAX today. Pushed up, there's ADR. Pushed up towards ADR, got out just shy of ADR, trailed, enter, out. So looking for the same play on the NASDAQ. And in the Dow, the opposite play, because the Dow's coming down. They're all totally out of sync at the moment. It's just a mess. This whole market is a mess, isn't it? But there's nothing you can do. This is the life we live, and you have to get on with it. But this is stagnation. This is somebody contacted me in Telegram about the opening range breakout EA, which obviously, for those who don't know, is the stop loss version of stock index hedge, which is what I trade. And they said about, they're having a very similar experience, funnily enough, getting chopped to death, making some money, getting chopped to death, making some money, getting chopped to death, making some money. So I pointed them back to the backtesting results. So this is multiple backtests, part of my robustness testing that I did. I did hundreds, thousands of tests on different variations, different system parameter permutations on the strategy. And these are just some examples of those thousands, which I created set files for to say, this is, these are just variations. These are ways you can use the strategy. But look at them. Stagnation, stagnation, stagnation. Yeah, stagnation. Total stagnation. Yeah. But it generated very good alpha over the long term. Same here. Profit, loss, profit, bit of loss, stagnation, profit, stagnation, profit, bit of loss. But look at this whole period. That's where we started. We didn't lose money. We just didn't make regular, consistent money. Then we had a lovely run. I would imagine during that period, the market entered normal trend, stagnated, bit of loss, moved up, down. That whole period, stagnation. Yeah, this is what this strategy does. It's a long-term edge. All good strategies are long-term edges. They're not consistent, you know, like the people that come into the Telegram group and say, I need to earn £60,000. I want to earn £6,000 a month. Good luck. There isn't anything out there that is going to consistently earn you £6,000 a month. You're going to have losing months. You're going to have winning months. You're going to have months where you make virtually nothing. You're going to have huge months where you make a quarter of your account balance. The market moves and you make money when it moves. When it doesn't move, you don't make money. Yeah. So what we're sitting in at the moment is something along those lines. It will pick up and it will be okay long term. It's just you've got to sit through the crap. Yeah. But you know, it's just you can see on all of these, yeah, most of them during that period had some kind of increase. Yeah, that one, that one, that one, that one, that one. This one did the opposite. Yeah, different variation. That one stagnated during the period where the others were making a lot of money. This one had a terrible time, made it all back, and then had a lovely rally. This one stagnated and went sideways. Yeah. Every variation has a long-term edge and makes money. Yeah, out of all the backtesting I did, there was over 75% of all variations came out as a profit at the end of the year. But you're never going to find one that is just looking like that. Doesn't happen. This is what we're sitting through. And this is why I hate trading M5. I couldn't do this as my full-time only thing because it drives you mental. And this is why people system hop. They don't look at the long-term picture. You know, I said it today. Oh, fed up. I've had enough of indices. I just want to stop trading them. That's how it makes you feel. But you have to stick at it because it has got a long-term edge. It's just, it isn't going to play out all the time. If you can not lose money, you're better than 95% of traders. If you can stagnate for a month and make no losses, you're doing well because everyone else is doing that. That's what it's all about, isn't it? But that's what happens in the real world. Manual trading doesn't mean you're TP on your own. Manual targeting, does it mean you TP on your own? Yes. Does the position trading strategy compound every month or every week? The position trading strategy doesn't compound anything. Your account does. Doesn't matter what strategy you're trading. It's got nothing to do with compounding. Compounding is where you leave the money in your account and use the money to risk more as you go. Doesn't matter what strategy. It's not specific to position trading. If this stock index hedge account had 3 good months in a row, the balance would go up. Therefore, my 0.25% risk per trade would be larger. Therefore, my returns would be larger. This is why you see all these EAs on the marketplace, and the profit curve looks like that. And you go, holy crap, that went from $500 to 1 million in 5 years. I can make $1 million. If you leave it in there and never touch it, it will, because the bigger the account gets, the more it risks, the exponentially higher the returns become, and they explode upwards. If it has a bad one, though, it will explode down as fast. So you start off risking 0.01s here. Up here, you're risking 150 lots. You would never risk 150 lots because every time it ticked, your account balance would move by $2,000 and you'd crap yourself. You'd never be able to handle it. Not a normal human anyway. Not many people I know would be happy to sit there and watch it tick up and down by $1,000. Every time you enter a trade, the broker is taking $1,000 of spread away. You can't hold it overnight. It costs you $5,000. Not realistic in the real world. I typed in John Wick drinking Mai Tais on the beach. He's not drinking anything, is he? At least he took his dog. Only because his hand has morphed into its head for some reason. He's been stroking it for such a long time that he's become one. If he stands up now, the dog will move off with him. And why has that got what looks like an apple core hanging off leaves around his neck? AI is great. At least he knows what a beach is. And he's put a little rug down for his dog. It's very... This is the thing I love about AI. What made the AI go, that poor little dog, he'll get very cold if he lies on that sand. I'll put a rug down for him. But what I'll do is I'll also do that to John's hand. It's hilarious, isn't it? And people are buying art made by that thing. Oh crap, and I just got rid of the nightmare from the last time AI generated hands. I know. It's bad, isn't it? Very bad. Did you backtest the 15-minute opening range on the US indices as well as the 5? Yep. It's all on the website. That's a 15-minute pre-market. That's a 5-minute only set. That is adding on to something. That's a 5 and a 15-minute tight set. That's a 15-minute pre. You can test the 15-minute post if you like. It doesn't matter what range you pick. It's a breakout. If there is momentum, it works. If there is no momentum, it doesn't. You can pick any time of the day if you want. But obviously with indices, you want to pick the open or somewhere around the open. Different people trade different things. The volatility changes every day. If you find the 15 allows for volatility to lessen and the breaks are more reliable. Every time you say that happens, I can show you this and go, no, that's bollocks. There's your 15 minutes. And there's your after 15 minutes. Didn't work today, did it, Wayne? There is nothing that works every day. Every candlestick on every day is different. There is no 2 days that ever have had the same price action. There is no set file or setting or time period you can use that will ever generate the same results because every single day is unique. You have to pick one. But if you want to go with the post 15, like Tom Hugard trades it, calls it the school run strategy. How many thousands has that lost this week? Lots. Yeah. Sometimes they work, sometimes they don't. They're all different. You just got to trade, basically. Get an edge, trade it. The edge is the edges that I've tested is this, and it works. It's just like all strategies, it's hit and miss, which is why everyone looks for the Holy Grail. I think the problem are the all-time highs. Trading these is always terrible. Trouble is, in a bull market, though, you are always doing that, aren't you? And in previous bull markets, we've had no problem. The trouble is, we're not in a bull market at the moment. This is not a bull market. I haven't got any data here. I haven't got any. Can't go back anymore on data. That's annoying. But we're not far. We've been in a bear volatile market for ages. Then we had this rally, and then we had the dump again, and then we had the rally again. And it looks like we're going back into a bull market. But if you go and look at a higher time frame chart, we're still not bull yet. We're getting close. I think we are possibly on our way. And I think this year potentially we might enter back into a bull calm market. And if we do, it's going to be fantastic. It will be more regular, but it just seems very erratic at the minute, isn't it? We're breaking down, and it looks like we're testing a new low. So we're an hour and a half into session. We're testing lows of the day. I've got my short TP on the Dow at 3R. Yeah. It's got as much chance as 5R today. That level. That's it's got a good chance of getting a reaction, whether it's big enough. Just make sure you get ready to re-hedge it. If you get out there and then you suddenly trigger on, just keep a hedge tight, because my target of 5R, if you look at it, is miles away from ADR today. So the average daily range of this instrument is all the way back down to here. So you're getting out there. It's got all that distance, potentially, assuming it doesn't go beyond ADR today, just to put in a normal average daily range all the way down to there. So look at the bigger picture, which is why I'm here, and I'm still miles short of ADR. Still quite dangerous, my exit. I knew it. I knew it would. I said it, didn't I? If I get out, it will drop. If you want to trade profitably, then just join this free trading group. There's on Financial Juice, there's this advert going at the moment for these. I don't want to call them clowns, but it's one of these, the usual guru type things you see, and they've just linked up with Financial Juice to do this promotion thing. The other thing that makes me laugh is Financial Juice's pricing. $1,118 a year. Unless you use the code New Year 92, then you can have it for $99. As long as I've been trading, this has always been $99. That code was generated in 1992. It's never been $1,000. This is how we discount things, isn't it? Get 92% off. It's never been $1,000. I've been a subscriber of this many times. I've never paid more than $99. But anyway, that's another thing. But these guys, I've seen them before, Basecamp Trading. They reckon they've got a 92% strike rate on their strategy, which operates on pure candlestick price action. If anybody could get a 92% strike rate in this industry, Warren Buffett would snap their arm off and pay them $1 billion to go and work for him. Because if Warren Buffett could get a 92% strike rate, he would just stick 10 trillion into the account and he'd just be up there, wouldn't he? The most profitable man on the planet. He already is, but 92%. What prompted me to look at that? Oh yeah, selling courses. Join the free trading group. And do you know what? Their trading group, it only costs $99 a month, but you can have your first month for $7. So you're going to give me a strategy with a 92% strike rate, can't say it, strike rate, for $99, are you? I've been around a little bit too long to start believing stuff like that. We know you work. We know you will work it out with the indices. There's nothing wrong with it. There's absolutely nothing wrong with strategy, the way it's traded, everything. It's all fine. I'm not changing anything, Peter. It works. It's just frustrating as hell sitting through this. The only reason I developed the ORB was I used to trade the ORB with Canard Desai. And it's a great strategy. It works. It works on stocks. It works on indices. It works on everything. But the problem with it is it's a 5-minute strategy. Therefore, it has a massive losing rate, as all 5-minute strategies do. And you have to have a certain psyche to trade a 5-minute stop or 5-minute hedge-based strategy because you will lose more than you win. That's just how those strategies work, because it's completely random algorithmic chop that you're trading. You are trading off the back of momentum, so you only make money on momentum days. Same as Canal does. Canal has big days and he has big loses, because when the market goes sideways, you can't. There's 1,000. Like that guy that just said, I just showed you. They've got a 92% strike rate based on pure price action. Short, long, short, short, long, 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 short, long, short, long, long, short, long, long, short, short. How far have we gone? That far. How many signals have you had? 30. You're dead. Doesn't matter who you are. Don't matter how much money you got. You're dead. If you're trading 5-minute charts, you're dead. Which is why SIH is so good, because we're in a trade. We'll wait. You make your mind up when you want to go somewhere, and then I'll decide when to get out. And then we'll see if we can make some money. That's the best way to do it. There's nothing wrong with the strategy. The strategy works. You just have to sit through the crap. But for SIH, I am going to put a re-hedge mechanism into it to test. So for instances like this, so for what Outro is thinking of doing, getting out here. So right now is your exit, Outro. There's your bull coming in at 3R off the propulsion. Yeah. So that is the propulsion gap bounce on the Dow. That's your exit. It's either going to work or it's not. If it doesn't work, what I want to build into the EA is auto re-hedge. So it'll be an option that you will either manually close out now. I'll do it now, because I might have a crack at this level as well. Actually, I might just give it 30 seconds. See, it's still bear candle. It's still a lower low, lower high. With the fact that we've got a wick doesn't fill me with massive confidence at this level. But I'm not going to get out there. But if you get out here, the pending order goes in, and then the pending order trails, then you get in. When your pending order is triggered, there'll be a re-hedge option, and you can set whichever R you want. So I would probably just leave it as a 1R option. So when that long hedge triggers, we have a hedge put back in automatically. And then that re-hedge is the entire contract size or lot size. And then we just target another 1R or 2R movement. Rinse, repeat, rinse, repeat. All that's going to happen is that single hedge turns into a double hedge if it goes wrong. But it means that it just controls those losses, because you're tempted to not re-hedge and not get out. So that I think will help with the strategy, but I need to build it into the EA, and then I need to test it to see if it actually is beneficial or not. I think it probably will be. There's nothing you can do in this sort of market. I mean, you look at the S&P 500. If you traded that today, you have got no hope in hell of getting out of that hedge at all. You can't get out. The only way you can get out is if it goes somewhere. If it doesn't go anywhere, you physically can't get out. Yes, you could take the shorts off now and hope that it does that and then get out of the longs there. That's a break even. But it's just a pain in the backside, isn't it? I don't want to sit here for an hour and a half. Too long. Got stuff to do. Like go and count the money I've made on hedging. It's much more fun. How often do I compound? I don't compound. I don't need to. You only need to compound if you want to trade with more capital. If you need to trade with more capital. Compounding is there's two types of compounding. There's a guy out there that drives a blue Porsche that will sell you a compounding course for $1,000. And on the compounding course, he'll tell you that compounding will often blow your account. So I just paid you $1,000 for you to sell me a course to tell me that it's going to blow my account. Could you not have told me that up front? Anyway, so compounding, there's two ways of doing it. One is you use an account as an investment account. So for example, let's say we're using the hedging account. We use it as an investment account. So we stick 15K in or whatever. We let it run. We leave it for the entire year. We don't touch it. That 15K turns into 50K over the period of the year. Then you can use that 50K starting next year to turn it into 150K. You use it exactly the same way as banks, institutions, and pension funds do. It's a pension fund. I stick 15 grand in there and it grows. That's what happens when you pay money into your pension fund. Your pension invests it into stock markets, commodities, indexes, all sorts of stuff, and it grows. Yeah, so that's one form of compounding. It's long-term investment compounding. The other form of compounding is where you take an amount of money, 15 grand, and you go in with high risk. So that 0.2, I go in with 1% per trade. Yeah. And I want to grow that super fast into 50K so that I can then trade normally with that amount of money with a normal risk and grab a regular income out of it. So you're compounding to grow your account to a level that you can trade with, because I need 50K to trade full time. I've only got 10 or I've only got 15. So I have to take high risk with this to grow it to that. And the plan would be to double this every 2-3 months. So it might take you 3-6 months to get it up to that level. You would use high risk and you would go into high drawdown to achieve that. Or use this strategy, which will do it for you. But it could also go pop. It's more dangerous. But so there's two types of compounding. One of them is growing your account to a point where you can get a lot. And this is what people do. The way they see it with prop is, I'll spend $500, go through a valuation. They will then give me 100 grand. Then I can reduce my risk right down and I can just trade that as a normal amount of money. The problem is getting from $500 evaluation funded. You've just proved to yourself you can do 16% return in 2 weeks. What do you do with that 100 grand? Suddenly drop the risk down by 10? No, because you've just made 16% in 2 weeks. You go in with 16% and you blow it. They also will blow your account, as we know. That's why they're all going pop, because they're all getting caught. But so yeah, it's up to you how you manage your money. This is a job that needs money. If you've got it, you can do it. If you haven't got it, you've got to find it. There are ways to do it, but compounding is high risk. You can also compound with super high risk, and that's what people teach. And it is right that they should say you will blow your account. So if I use the market reverse alerts EA, or this account, for example, yeah, let's say on this account, I'd gone in with 1% risk. So that's 5x the risk being used there. That would be 5x higher. So the 15 grand account, instead of producing 2,600, would have produced 5 times that. So I'd have turned that 15K account into pretty much a 30K account, doubled it in 8 days using massive risk. But I would also now be sitting in 8% of drawdown, which is 1,600 times 5, 8 grand. So take that 13 grand, take that 8 grand off, and I just made 5K. Brilliant. But massive risk. What if the first 10 trades I'd taken had actually all gone against me? It's gone. So it is the same as walking into a casino trying to compound an account with high risk. Because when you press that button, it's either going up or it's going down. The trade is either going to work or it's not. You get a series of trades that don't work in a row, you're dead. If you get a series of trades that work in a row, you've doubled. You could go into a casino and do the same thing on red or black. You could go and play blackjack and use a martingale strategy on blackjack to double your account very easily. I've done it many times, but I always walk out of the casino with less money than I start because martingale cannot last forever. And that's how compounding works. You can use martingale to compound an account, but you have to just accept the fact that you are gambling. I like to gamble as much as the next man, but I can't make a living out of it. But I could gamble an account up to a level that I can find enough money to make a living out of. And that's what people do. And that's what a lot of people call compounding. But massive risk. Why is there so much chat today? I'm trying to get to the end of chat. And every time I stop talking, there's about 1,000 more messages, which is good because there's nothing happening. We might as well carry on. In fact, I've got to go in about 10 minutes. So we're pushing down into the previous day's high on the Dow. Which is in the middle of this propulsion. So that's where we rejected. And then we opened up the next day and we just sat around the previous day's high. And then obviously we did that flush through. So it's not a great area because it's invalidated lots. But it is an area that you will find people looking to buy from because we haven't got to the yesterday's low yet. So that is the next daily level, which obviously you can see they're buying up at the minute, but we'll see if that holds. Volume on indices from recent days come 2 to 3 hours before the end of the trading day. Yeah, you do get those end of day flurries. But that's because we're in earnings season at the moment. So you get earnings flushes, basically, where they just dump into them. But you do get that anyway. Lots of times you get it, but you can't time it. And you never know which way it's going to go. So if you see volume coming in at the end of the day, then that's usually quite a good thing to get on board with. But you can't pick the time. It'd be lovely if we could pick the time that happened, but it doesn't happen the same time every day. I just saw the work naked I sold. The word naked, did you? Oh, you're sold, right, yeah. Naked candlesticks, they trade. That company. What's the set file called in the Telegram for the hedging positions? It's just search in the file section. It's these ones, and it's the that one, H1 hedge test. That's the set file that I'm using, but I've removed the drawdown control and I've removed the automatic targeting. Because I'm doing it manually. What's the profit factor for the H1 hedging strategy? Don't know. I haven't had enough time to look at. What? 13.56. Ta-da! There you go. "74 viewers, 69 likes. Ah, we're getting good at the thumbs, aren't we? 68. Oh, that means somebody's unliked me for some reason. I probably had a go at somebody. I don't like him anymore. Please stick with the indices. Yeah. Yeah, I'm not playing. I just, the only reason I started trading indices again or scalping again was because of COVID and the markets changed, and I needed position trading was struggling when the market was not knowing what it was doing. So that's why I started developing ORB and SIH, and just to make some extra income, and specifically for prop. And I'm not doing prop anymore, which is why I've put my own funds into it. But it reminds me every time we trade through sessions like this, it reminds me how much I hated 5-minute scalping. Not because I wasn't very good at it, because it was hard and mentally hard. It's one of the most mentally hard things to do, scalping. Position trading is so easy. I mean, we're not even looking at the charts. We're just waiting for the market to come back in our favor. Pound odds ADR. Pound is rallying a little bit. Yeah, pound yen's 125. That's going to stop me out of that aggressive. Get close. Look. This month is going to be a write-off on the H1M5, I think. So there's my exit. I'm probably going to hit that by the looks of things. Look, 1, 2, 3, 4, 5, 6 hours. 7, 8, 9, 10, 11 hours if you count that one black candle. Yen is not the market is not liking what the Japanese said about that move. I can't not take that off though. That's going to have to come off. That's going to cost 0.5%. Well, it's going to, yeah, about 0.5%. But I had a failed DD, remember last time. So that was the aggressive drawdown control position that worked. That was the aggressive drawdown control position that failed. Remember that one to there. So quite often don't get the first one right, but the second one will, hopefully. Out the Dow with my buy stop placed. Do you use manual targeting on all strats? I do, yeah, personally. But you don't have to. I mean, it's up to you. Use auto. I get out of trades too soon a lot of the time. It just the way that I do. So the EA will get out of trades an awful lot faster than you will, because the EA is told when we hit X ADR or when we hit X profit, close. And you might be looking at the chart going, oh, this thing's screaming down. And the EA will shut it out and you go, whoa, 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 I don't want to get out there. But that's what it's told to do. So I would much rather manually. So I'm in this short here and I'm looking at this again going, it's 0.25%. Shall I shut it out? But it's dropping nicely. But then again, my other head is saying we've hit ADR. We should be exiting here. There's no propulsion gap targets to aim for to the downside. But it's a lovely double top bounce. So, you know, I haven't got a target on it at the moment. There's nowhere really I can see that is obvious. So take it off. Stick it in here. Discretionary targeting. But last year when this was running on the VPS, it was using the set file with the targeting. It made 140%. I think I can do better, but that we will wait and see. Out the Dow? Oh, right, with the you've probably been triggered on your buy stop, haven't you? Because you just had an outside bar. So you probably got triggered long there. Depends what the offset was. S&P selling off hard. NASDAQ's coming down. DAX I don't even want to look at. It's always the candle I exit on. Literally the next one, isn't it? It always is. It's always the way it works. Why is it always the way it works? Because there's always a 50-50 chance of that happening. So 50% of the time when you get out of a trade, it's going to go further. 50% of the time, it's going to come back and you're going to go, oh no, good. The rest of the time, you're going to go, oh, I'm too early. There's only a 50-50 shot. One or the other is going to happen, isn't it? It always happens to me. Would you ever work in some kind of fund? Nah. I don't do this for other people. I do this for a lifestyle job. There's jobs that you do that you love. There's jobs that you do that you hate. Pick a job you love. You'll always do it. I've always had an interest in trading and finance, but managing other people's money is not my idea of fun. This is stressful enough as it is. I don't want to have other people's mortgages on my books. I've made the transfer out of my broker and they're saying it could take up to 14 days. Well, it won't take that long, will it? Broker's that. Mind you, it took me 5 days to get out of Robo, so I think you'll find it'll probably land faster than that. I think that's probably a case of it gets passed on to accounts to process, and it depends whether Beryl from accounts is in today. If she's not, she'll press the button tomorrow. With the statistics on FX Blue, is it safe to give them your access to MT4 accounts? Yeah. So all stats in here, they verify them basically. So you give them your investor password. So in your account, you've got your login, and then you've got an investor password. So you give them your investor password, and an investor password is read-only. So they have read-only access to my account. They cannot do anything into, they can only draw out of data-wise. So that's what investor passwords are for. So that basically, you know, if you wanted to, if I was going to run a PAM and you wanted to see my performance, I would give you the investor password for my broker account, and you can go and you can analyze everything. You can look at everything. But this does the same thing. This is the same thing, basically. Just shows you all the data. So we're approaching 4R on the Dow. NASDAQ. Down. I watched a video of the blue Porsche guy the other day, and I swear to you, he said word for word, trading is hard. Even if you buy all my courses and watch all my videos, you probably won't make money. Yeah, he does. That's his catchline. Trading is hard. You will probably lose all your money. That is what he says. And it's totally true. 90% of people will never make it. We have certain people in the Telegram group that ask questions, and as soon as you read the question, you go, this isn't for you, mate. And I think that's probably 90% of the people that land in here disappear off, land in the Telegram group, disappear off, because they're just hopping around looking for that guy that can go, here, I've got this secret strategy that gives you a 92% strike rate. Trading is hard. Look at it today. This is not easy. This is a pain in the ass. Some days trading is easy, and I go 15 minutes into the session, I'm like, done. Don't get many of those, do we? But we do. Looks like I could have shafted myself on the Dow. It is extended. We're on a 2-hour drop. So, you know, look at that move there. Look at that pullback. Look at that move there. Look at that pullback. Look at this move here. You will get a pullback, but it may well do that. But the pullback will be there at some point, which is why we trail behind because we're waiting for the bulls. The bulls are not there yet. However, you've just had an outside bar, which may have triggered you. And if that did trigger you, yes, you're in drawdown. But you're only 10 minutes into the drawdown. Suck it up and wait. This is why if I build a, so this is a great example of the hedging mechanism I'm looking at, right? So that is the range today. Yeah. So you take that, let's say you got triggered there. Yeah. You're still in, you haven't re-hedged yet. That's basically how the mechanism will work. If it pushes down below that level, we re-hedge and we go for another 2R. When we get to 2R, we exit the shorts, take that profit, stick that profit up in the bank, and then we trail another entry. When we trigger on that, we add another hedge. So let's say we re-hedge, push down. Let's say we TP there. We get triggered on a new entry. We re-hedge. Either that comes up, out, thank you very much, or we re-hedge. So worst case scenario is we have a 3R loss. But it's got to have moved a fair old whack. And don't forget, you've banked a load of profit there. You've banked a load of profit there. Any kind of pullback whatsoever is going to get you out with a decent profit or a break even, isn't it? So that's the mechanism that I'm going to build to test. And obviously, if it's any good, I'll do it. If it's not, then I'll chuck it. But a few people have asked for it, and I think it's a good idea because I've also left some of these running too long and taken hits which have cost me half a week's profit. What you do? The blue Porsche guy. I've got to call him the blue Porsche guy. I don't want to use his name, Sean. But yeah, he's the one that sells the compounding course. What's the reason to change from H5 to H1? Hedging strategy. I've never traded H5. It's M5, not H5. We haven't got a H5. Just because it's slower. The M5 strategy on the website is if you want to compound, yeah, this strategy is amazing. It produces alpha really quick, but it will, if it gets into a big squeeze, it will blow your account. Yeah. So, and if you get too overexposed, you've got to limit your exposure on it. But it's a really, really, really good strategy. But for me, it's too quick and too risky. I'm risk averse. I do not want to risk high amounts. Yeah. So, H1 is a hybrid of that strategy, but with the testing that I did when I was developing this version of that hedging strategy, I originally used an RSI to get in exactly the same way as the 5-minute version does. But what I found was it was very hard to get into a hedge because for H1 RSI to get from one end of the spectrum to the other takes weeks sometimes. Yeah, look at an RSI on the hourly chart. So let's say, for example, for argument's sake, we're using the 70-30. Yeah, so you had an extension there, and you had an extension there, and you had an extension there. Yeah, so that's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. So you'd have gone short, and then you'd have hedged. 1, 2, 3, 4, 5 days, and then you had another short, but you wouldn't have taken that one because you're already in the short from there. Yeah. So now we are, what, 18th of January to the 8th of February. We're just in one hedge. We haven't banked anything. We haven't lost anything much. We're just sideways. Yeah. On the reason it works so well on the 5-minute time frame is because you can get in and out of RSIs in minutes. Look, 5-minute time frame. Yeah. In multiple times a day. You're in there. You're hedged there. Within 3 hours, you're in twice. That's why it works so well on M5 using an RSI, because we wait for the market to push, then we go short and we take that off and then we go long. If it goes into that sort of movement, we're going to have a long and a short on, and we'll see which way it goes, and then we'll take one off and we'll get back into a position. It works really well. But because you're not using any higher time frame bias for strength of movement, you could get into a long there. But because you're trading 5-minute, you're getting to a long there, you'll get into a long there, and you'll get out there. But on H1M5, you won't do that. So it works most of the time. But if you backtest it, the actual strategy for a long period of time, you'll see that it can go into quite high drawdown. So the idea of using the higher time frame is we slow everything down, which gives us much more control, analysis, time to do drawdown control, and just let it evolve and mellow, if you like. So that's the only reason I started developing this. There's nothing wrong with the 5-minute version, but you need very large balls. It's the sort of thing we were talking about compounding. You can compound very quickly with that. If you went in with 0.5% risk per entry on that and you ran it on 10 or 15 pairs, you'd have a very big pot build very quickly. But the problem with compounding, and this is why it doesn't work, is not because compounding doesn't work. It's because you don't work. When you can prove to yourself that you can turn 5K into 50K in 3 months, you'll be going, Jesus Christ, I can turn 5K into 50K in 3 months. You're not going to stop doing that. You're going to carry on doing that until your strategy hits a stagnation period or a losing run where you lose the lot. Because you've proven to yourself that you're an amazing trader. You're not. You've been lucky. What you've done, it's going to take forever to load. What you've done is you've walked on water. This is where compounding doesn't work. You get this, wow, I've just made 35 grand in 3 months or whatever it is. I'm amazing. And the market will always, always kick you in the arse and go, no, you're not. You've just had a lucky run, mate. Pop. Now I know what to do with compounding. I build the account up, and then I reduce my risk to take a regular income out of the market. Autopilot. Yeah. But people don't realize it. And this is the prop methodology. We'll give you an account of 100 grand. I want you to give me 8% return back. And then I want you to prove you can do it again. And then I'll give you 100 grand to trade with. No. I want you to have a lucky week. And I want you to be one of the lucky people that has a lucky week followed by a lucky week. And then I'm going to give you an account where you think you can get a lucky week again. Nobody gets 3 lucky weeks. It doesn't work. You can't produce 16% return in 2 weeks consistently. The market will not allow it. The market cannot stay in that condition. You die. There's your bounce coming in. So we've got an inside bar. Break to the upside. Might bounce from here. It might do that as well. Do I risk it? Risk it for a biscuit. So this is, I mean, it's literally a pip out of propulsion gap close. So it's filled the gap. It's coming down again. Look. I'll tell you what another good thing to do with this situation is, is to put a trailing stop on this. So if you trail this with a stop around about 30 pips, 2.5 minutes left on this candle. Let's do that. So I'm going to trail it with just checking that. Never remember which instrument I want. So trail it with 30, and the second half. So basically what I'm doing now is, if this breaks to the upside, I'm going to automatically exit these shorts, and then it's automatically going to flip long while that momentum is happening, which is another good exit strategy. If it continues to run down, I will trail with it until it puts another bull move in. When it puts that bull move in, it exits me automatically, places my pendings, and if that bull move continues, I'm in and out. Another way to do it. Again, that's another exit mechanism I looked at when I was building the EA. I found it doesn't work very well automatically, but it does work very well when you've got an obvious support resistance bounce point that you're playing off, which we may well have here on the hourly. Who knows? It's 50-50 in it. What do I spend my money on? Cars, jets, wild swimming, watches, multiple houses in multiple countries, the mortgage, the electricity bill, food, the kids, a couple of holidays a year. Same as everybody else. I don't earn enough money to... I'm not Greg Secker. I don't run an education business turning over £50 million a year, teaching people how the market moves up and down and then paying me for education. If I did that, I would own lots of cars and watches, but I don't. I trade for a living. It's a different thing. We don't earn that sort of money. If I had £1 million in the bank, I probably would earn an awful lot more money, but I don't. And to be honest, I wouldn't want to trade with that money. Get a life out. We're waiting for the cleaning service to hit the sell button. That would be nice, wouldn't it? What do I spend money on? At this point, it's looking like I won't be starting with my new broker until at least mid-February. Do you think the new EA would be ready by then? I don't know. Maybe. It's running, it's testing, it's working, it's banked today. So it's all doing what it should do. Oh, and we've had some entries on some trades I was waiting to trigger. Let me just check these 1 sec. So I set some of these up to trade ADR reversals instead of H1 RSIs. And it looks like we've had some of those trigger. So I just need to check which ones they were. ADR entry long. There we go. Pound CAD. So ADR is 740. I just need to quickly do the maths on this. 518. 563. Perfect. So that's working. So it's all working. ADR trigger's working exactly as it should be. It's set into hedge mode, so it will also take an ADR short. And that ADR should be the same distance away, 516. Perfect. It's all working. Love it. Yeah, so it's all fixed, AZ. So yes, it will be ready by mid-February. In this form, anyway. I want to add more to it, but all functionality is working nicely. Size is right. Yeah, job is a good one, as they say. Okay, we're double bottoming, W pattern going in down here. This may be it. So I will get out. If this market decides to rally and we break that high, I will be out of the shorts. And then obviously we'll flip long on the aggressive exit and see if we can get a push up into here somewhere to exit the position. And then I've still got to deal with the NAS. No idea what to do with this thing today. It's basically pushed up 2R and stuck. So it's not moving. I'm loath to get out the longs here and try and break it short, because I think this is potentially going to hold up this level and we're just going to sit around and then do something like that for the rest of the day. I don't think it's going to collapse down. So I think that's just going to turn into a loss today, unfortunately. If I can get a profit out of this, DAX has made a profit today. FTSE's made a profit today. So I'm in $80 odd. It's nothing. But if the rest of these, if that can come out with, what's that going to be? 240. So I'll be getting out of that one with about 100. So that'd be 180. That's paid for the hedge. So I'm up 70 on the day. It's neither here or there, is it, really? Thanks for subscribing, people. I've got some new people. Look, Pap and SVN, welcome aboard. I've been trading for 4 months on demo. Not very profitable, just 3%. What do you mean, not very profitable? It's 3%. You're profitable. Nothing wrong with that. If you've only been trading for 4 months on demo and you're up, you are part of the 5% of people that aren't losing money. Any books you might suggest? Why do you want to read a book, SVN? Tell me why you want to read a book. I'm curious as to what you think a book is going to give you. That's pretty much all you need, though. Full automation is impossible anyway. Yeah, exactly. Once the new EA is implemented and functioning properly, does that eliminate the MRA EA? No. So the MRA EA is still going to be running for the time being, while I forward test live the new EA. It's got different entry criteria, and it's going to have different functionality. So it's the same concept. It's position trading, but I'm going to run that on another account, and just there will be small accounts to start with, just to test that I'm not missing something, because the back testing is all fine, and not dissimilar to obviously what the MRA does, but it does trade in a different way. So I just want to make sure it's all working fine. And then I will probably replace the market reverse alerts EA with this. Only me, because that's what I want to do with it. There are people that still, people are still using the market reverse alerts EA for trend direction trading, all sorts of stuff. They're using yesterday's high-low entries. So, the market reverse alerts EA is way more complex and does an awful lot more than this does. But that's why I want to use this, because I don't want all that crap in there. It's much more lightweight, requires less processing. It's just better. So, in my opinion. So, it's not replacing the reversal alert. It's replacing the way the market breaks in a different way. That's all. But I'm just getting in more aggressively. Not necessarily a good thing. There was an entry taken today here. Yeah, so this euro yen short is a prime example. Look, right, the reversal alert was there. Okay, so if you're trading the MRA EA, you did not get that order on, and you have not entered a new position today. You will be getting in there. I got in here, but the reason I got in there was because that is at least half an ADR apart from the original position, but we didn't get a break in structure because structure held. The sellers that took control of the market at that point got rolled over. They never regained control. The bulls are in charge. This is what the market reversal alerts edge is. It tells you when the last batch of sellers that tried to take control of the market succeed. Therefore, the buyers will roll over and the short move will start. A moving average cross tells you that we've had a couple of sellers enter the market, but they got nowhere near where they wanted to be and the bulls took back control. This is the disadvantage of using this entry mechanism. The advantage of using this entry mechanism is I got into a trade. If that reversal alert had happened there, the distance between that entry and there would have been 43 pips. I need 51 pips. So the EA would not have taken a position. So the advantage is if this pulls down from there, my average is there and I'm out today. The disadvantage is I'm going to get in without structure breaks. There is always, everything has a plus and a minus. So it's a different way of doing it. It's more aggressive. But in this type of market, more aggressive is good because we're not going anywhere. I want to be in as fast as possible. And I'm going to get tighter entries, which is great. But what I want to make sure, and this is why I'm forward testing this, I do not want this to turn into a way of grid trading. That's what worries me about this this way of entering. But we can fine tune the entry mechanism using the MA. I could select the MA. Why are you not selecting the MA? What the hell? Give me the MA. We can fine tune it. Yeah, now that's more like a reversal alert. So if you want to use this more akin to what the MRA does, probably a 20 MA on the 5 is more akin to a market structure break. 9 is more akin to a scalp move. Yeah. So the market reversal alert in this case, which would have been potentially triggered there, you'd have got in there, which isn't far away from where the MRA would have been, but you still didn't get a structure break, but you got in later than that. All a moving average does is it moves further away from price because all you're doing is saying, give me the average over 20 instead of 9. So it gets closer and further away. So you can fine tune your entry. But it's much smoother than a market reversal alert. If you get a big candle up like that, and the last down candle's there, that's where your alert is. A moving average will be up here somewhere. So you would get an entry if it accumulates and breaks, you get an entry there. You don't get an entry till there with the MRA. But the advantage is if it does that for 2 days and then goes up, you didn't want to be in it, did you? Always a plus and a minus. It's horses for courses. There is no right or wrong. You just need a mechanism. And an MA cross is what I was taught 10 years ago by Canal Desai about stocks and MAX entries, and they are fantastic on low time frames, but they are also sometimes too aggressive. So 3% is pro level. Yeah. You could potentially put the MRA as an entry option. I could do, but just use the market reversal alerts EA. What's the point? Just use the market reversal alerts EA. What's the point in me coding? Market reversal alerts logic is quite complex and quite big in code. What's the point in me putting all that extra crap into this when I've already done it? It exists. There's other entry criteria we could use. Bollinger Bands. We could use price action. Moving average is simple, which is why I like it. It's simple. It's fine-tunable. It's any MA you want. You can select any MA type. So you can, with the MA entry, you can use it exponential, simple, smooth, linear. You can use closed, open, whatever you want, whichever MA period you like. Use whatever you want. But that's the thing that you just mentioned. That's the big thing, is manual entries being used with the EA. So aggressive drawdown control entries with that is going to be a little bit of a game changer in respect of the EA actually managing the whole thing for you, which is what we're missing. Okay, I am out and back in to an aggressive exit, target 120. So basically, if this plays out to 120, that pays for that. So the afternoon is a complete waste of time, and I walk away with this morning's profit. Happy days. You haven't come back to me with why you want to buy a book, SVN. I don't know, you've probably gone, haven't you? But what I was going to say when you came back with the answer was you want to learn new strategies or something, is that books will only teach you stuff. If you're looking to become a better trader, you can read every book under the sun. None of them are going to make you a better trader. They will give you a lot of knowledge. That's all you get from books. Knowledge. They teach you stuff, which you retain. And then you don't use it. You have to do. This is the longest live stream we've ever had. Jesus Christ, it's 5 o'clock. I've got to go. I've got a class to get to. Yes, it is the longest live stream. 2.5 hours. Right, I'm off. Bye. I'll be back tomorrow morning, 7:50 for Frankfurt. I'll be back tomorrow afternoon for New York, as usual. Anything you need, I'll be in Telegram. Hopefully this plays out. If it doesn't, I'm going out to a spin class now, so I'm going to re-hedge it with 1, 2, 3, 4. God, got to go. Need a calculator. $5.16 short. So re-hedging under the lows. If we break 4R, if this basically doesn't pull back, I'll be closing that. I'm going to need to check that because I'm going to need to remove that if it does exit. So yeah, that's the play on that. NASDAQ, I'm leaving in play. Just not going anywhere, is it? So there's nothing I can do with it. Right. Back tomorrow, usual time, 7:50, 2:20. See you then. Have a good one.